Oh, Mike in Ormond Beach. Mike, how are you? Sorry, I didn't see you.
Hey,
You'd like to
Basil.
look at? Yes.
Last week, I was short Bank of America, and I got out on the 3rd. I made like $1.
Yeah, good.
And anyway, I was looking at it now, and to me, it looks like it may be starting to form a bottom. Correct me if I'm wrong, but I was thinking about reshorting, and then I saw it on my chart. It broke above the 9 EMA, and it looks like
Correct.
the MACD is starting to point upwards, and the two moving averages moving further apart. So I know they're going to be reporting earnings either
On
tomorrow
Monday.
or sometime next week.
Monday the 16th, yes.
So I was wanting your opinion if you think it's forming a bottom, or maybe to possibly reshort it again.
So, first of all, congratulations on shorting this because it made a peak E at 33.05 on the 16th, the week of the 16th of March, and it took quite a dive, went down to the 27s. So, in the monthly chart, what it's done is made pretty much lower lows and lower highs ever since it made that high, and it's held the 9-period moving. It's held on a closing basis so far this month. It's just above the 9-period moving average, but since it broke above the 14-period moving average back in August of 2016, August, it goes to 16.24, and it hasn't touched that 14-period, the black line in the monthly chart, since this month, and it just touched it at 27.67. That's the level. Now, this is going to be very interesting. So just for disclosure, we're long, my opening call subscribers, we've got the BAC, Bank of America, and what I'm looking at here is there is a chance, and this is why it's important. In this particular market, there are moments where there are some stocks where you actually have to be in it beforehand, because if it's successful, they gap up, and then it's kind of tough to buy the gap because they gap up, but the general market's not really following. You know whether or not it's going to continue higher. So you just want to be in it. But what I've done is I've put a fairly tight stop. In fact, it's a pretty darn tight stop. One of the reasons being, I love the candle, the gap up candle of the 9th. I love the fact that it went higher on the 10th. I didn't like the fact that it closed below the closing price of the 9th, which was at 29.05. Next day it closes at 28.83. But we've already had a test of the 9-period moving average, the black line, as he was saying, is holding above it. I quite like it. What I'm going to say to you is, for the risk of, and I'm not sure that if Bank of America does everything correctly, I'm not sure it's going to really skyrocket into the 29.50s. I think it might be a nice bounce, maybe gap up 25 cents, and then hold on for the rest of the day if it's good news, and then it could start moving higher. But I don't want to see a gap and then a failure, or I don't want to see a failure straight away. So I'm keeping a fairly tight stop. I'll make a decision tomorrow whether or not I actually want to hold it through the weekend and take a risk. I just don't, because of the way Bank of America and the other banks, the XLF and all the other banks, the financials, I should say, have acted quite poorly. Even Goldman Sachs, which looked like it was going to have a really nice breakout, is holding. It looks like Bank of America. It looks like most of the stocks. That weekly chart is still quite negative on all of these. So what I'm going to say to you is, I don't know what your risk, I don't know what risks you want to take. Well, we've got a break coming up. Let me do a little bit more work on it if you can hold on. I just want to look to put it into perspective with other stocks in the same category, just to see if I'm right about thinking that as you just said, maybe there's a base forming by the doji candle of last week holding, because if we close above it, that's a good sign. I'll be right back with Mike in Ormond Beach. We'll be back, and the Dow's up 208. There are a couple of things going on. I looked at the XLF. I looked at the KRE, which is a Spider S&P Regional Bank Index, looking terrible. It's down 77 cents right now. I shouldn't say, I mean terrible on the day. It's making an arch formation, and the 200-period moving average of 60.57. looks like it wants to be tested. It's the 6147, the XLF, which has Visa, MasterCard. I believe it also has American Express, and all three of them are up. Is a lot better looking, but not great. And it's got that triple, well, 4 times tested, the 2676, 2655, 2640, I think it was, 46 level. And then most lastly, right here was 3 weeks ago, the 2661. Beautiful straight line, trend line support that it's held. This is what I'm thinking. I try to, I like to look at the market both as a technical, in a technical way, as well as a psychological way, because that's really a big part of what goes on is psychological. And I'm saying to myself, so Mike did really well. He shorted something that most people weren't even talking about in terms of a short. So he did a beautiful trade. And then he got out. Now, the only reason you get out is because either it met your target or there was that moment that said, gee, it could go up, but it could go down. And I always think of that. It's the same as like when I play tennis. If a shot comes to me and all of a sudden I really don't know what to do, that's exactly what I do. And the shot that I do is a lousy shot because it didn't know what to do. It could have gone this way, could have gone that way, and then I flubbed the shot. And that's the same thing here, that if you got out because you were thinking, gee, I've made some money and now it could go up, it could go down. Turns out that it did go up. This is the same sort of thing. I'm saying to you that the results of the bank stocks, there are very few clues here other than to say that the trend on the short term has turned up. And there's a pretty good chance that based on what we're looking at, if the MACD, which is good, and the stochastic, which is only at 64%, if there is, by the end of the day, at least a nice rebound from the 2710 level in the XLF to maybe the 2722 level, that stochastic will improve a lot, and that will give you a better chance of saying, a day to go for some of the financials to report. This could be a nice leg seat to the upside. Hey, wait a minute. If they fail, this could also become an arch formation. So what I'm saying to you is the same reasoning I'm suspecting, I'm going to ask you if I was correct, in getting out of your short position, because it had kind of accomplished everything you wanted, and now it was at a point where it could turn. I'm saying that I'm right on the cusp here. If there weren't earnings, I'd say, gee, it looks like there should be a leg C, but it's going to be very important with the banks coming out. And the yields, in fact, have been coming down for the last couple of months. So I'm saying to myself, this is going to be a big test for the financials. I just don't know if I want to say to you, take the risk of either shorting or maybe even buying the XLF. I would rather wait until something like Monday or Tuesday. Why? Yeah. Because if the XLF is up in the 2755, 2760 level, that's going to suggest that it can go higher. And if it's below 2670, it says, whoops, it could go lower. That's too big a risk right now. So I'm not sure what I'm going to advise you, just because you just took off what you thought was perceived as a risk because you had been rewarded nicely. I don't know if you want to just give that back. I'm not going to be able to give you anything definitive right now. I need the result of going above this peak B in the XLF. And in your case, Bank of America, which has the same scenario, it's got a little bit more to go, actually. It has to go over 3 days ago. It has to go over 29.33. I'm going to also have to make some decision about this. I don't want to be trapped if it comes down, because if it pulls back, that could say, hey, bank stocks are not going anywhere for a little while longer. I hope that helps you in a way.
Yeah, well, the reason I shorted it, I saw it had looked like it had support a little above 29. And when it came down and hit that area a couple times and rejected it, looked like support. So
and then broke it. Right.
Anyway, I had an order in to sell short slightly above there with a tight stop, and then it broke it. And then when it got down a little above 28, that's where I covered it. And it looked like now we may be setting up a new range lower, like a little above 29 to a little below 28.
So you're looking pretty much the same thing as me. So I'm just going to suggest, have a little patience. I don't see why it's worth risking 70 or 80 cents when if
Yeah.
you get this right, you're going to make much more. I'd rather just step aside. I'm gonna have to make some decision. We only have a small position in the Bank of America, but it is a position. I'm gonna have to try to deal with it. I was hoping that the leg that we had that was going to break the downtrend line that I've got here, which is now at about 29.37, would have been done by today, and it hasn't been done.
Okay, well, thank you, Basil.
Thank you for calling, and let me know how you do and what you do. But in the meantime, the doji candle from last week so far, the on-balance volume and the stochastic have tried to turn up from there. That's a start, and that's why I'm saying that if the XLF is able to trade in the 2940s anytime by Monday afternoon, Tuesday, I think that's a good sign. I think the XLF will have a better run if it's able to do that. Thanks for calling, Mike.
You're welcome.